All right, trade pros. Good morning. Welcome to the morning market update for Thursday, February the 28th. This is George from Trade Pro Academy, and the camera's really far. Let me move it a little closer. I hope you guys have had a great day so far. I hope you had a great day yesterday. Yesterday, I was feeling a little bit under the weather, and so I decided to go home early. I didn't even trade. I went home early and just nursed myself back to good health. So I'm back at it. I'm stronger than ever. Watch out, Mr. Market. All right. In today's morning market, we're going to do a little fun fact for you. So let's start out that way. Each sector in the S&P 500 in 2019 is on pace for gains for 2 consecutive months to start the year, which is the first time that's happened since 2013, that all sectors are green. All right. Interestingly enough, the sectors that lead aren't the ones you would think. You'd think financials, technology. It's not true. Actually, the first place one is the industrials. The industrial sector is leading by 19% gain so far in the first 2 months of trading. Energy's up 14% and technology's up 14% as well. So yes, tech is up there, but it's not the number one. It's the industrials index, which is very interesting. All right, this morning Wall Street is looking like it's a little bit shakier. The bull market that's been going on in the last little bit is starting to see a little bit of resistance. Some of these news items we've been waiting a long time to find more details about are coming to a close soon enough, particularly the trade agreement. So we're going to talk about that in a moment. And the North Korea talk. So yesterday, the North Korean summit concluded without an actionable denuclearization deal, which is what the United States government was looking for. So Donald Trump said they have a great relationship, they had a good meeting. There were some handshakes and smiles, but there wasn't really a deal or an agreeable deal that's enforceable, that's verifiable. And, a lot of politicians expected that to happen in that meeting. And Donald Trump seems to be more of a relationship guy that will nurse it slower, but get it to where he wants it to be. So at the end of the day, yes, there was no actionable agreement out there. And so the markets are a little bit disappointed with the North Korea summit. But, it's a relationship and it could take time and it's something to follow through on. But for the most part, it is a disappointment to the stock market. The stock market expected something out of that. If we had some kind of agreement there, we would have seen a lot of rallying. Right now, we're just hanging on and trying to consolidate at the top and hang on to these gains. I got to tell you something. As traders, you look at a consolidation, you say, oh, man, this isn't an opportunity for me. But in this kind of market, a consolidation is a good thing. It's actually bullish. It means the bulls are hanging on to the gains. All right. And I do think the next move is going to be downward from here for another 30, 40 points of retrace to let out some late buyers, and particularly because of what happened yesterday. So yesterday at 10 a.m., Trade Representative Robert Lighthizer dropped the bomb on the market. Unfortunately, I was at home nursing myself. I couldn't trade it, but the team got it here. Victoria got a nice trade off it. And it was breaking news. He said that it was too early to predict an outcome in the trade talks with the United States and China. And considering that Donald Trump just yesterday said that he would waive this new round or delay this new round of tariffs that were supposed to come in on March 1st, it was a positive for the market. And then Lighthizer comes in and kind of spoils the party, as he's known for doing. Every time I hear on the squawk, Robert Lighthizer says, I'm like, oh, here we go. I get ready on my DOM and I'm looking to short. I'm never sitting on the buy side waiting for his news. Anywho, he said he'll need to maintain the threat of tariffs on China goods for years. That's where the market was caught aback, because this just said that it's not a one-off meeting. It's not a March 1st deadline. This is a multi-year type of policy or approach. And I'm sure Chinese representatives were also taken aback by it if they hadn't already been told that behind closed-door meetings. But he said, you know what? Even if Washington and Beijing strike a deal, we're still looking to hold this threat of tariffs for years to come. And that talks to me, that speaks to me as though they're not really close to an agreement. All right. If they were close to an agreement, that wouldn't need to be said. And so that's where the market took a little bit of a slide. Yes, it caught up. Buyers took it right back up to where it was. And I think the dynamics have changed. All right. No North Korean deal. Trade negotiations are sort of wishy-washy. Yes, there's no tariffs, but there is no deal either. So there's a lot of talk. There's a lot of work and no significant announcement of progress. And that's what the market's going to perceive it as. It's not my opinion. All right. That's the market's opinion. I'm the market whisperer here. I'm not, not here to tell you about myself. I'm here to tell you about the market. All right. China's manufacturing PMI in February fell to 49.2, which is officially a contraction, ending below 50. That wasn't good news. All right. And Asian markets are selling off today on Robert Lighthizer's single one announcement that they're not close. So far today in Asia, Japan's down 0.8%, Hong Kong's down 0.4%, China's down 0.4, India's down 0.1%. In Europe at midday, London's down 0.5%, Paris is flat, Frankfurt's down 0.1%. In the U.S., Dow Jones, S&P, and NASDAQ are all down 0.3%. So we're seeing a little bit of an overnight sell-off. And the big question here is on the opening session at 9:30 in about 23 minutes time, will we see buying volume, or will everyone that's long start to take a little bit of profit? Because let me tell you something. In this latest rally, this is one of the most hated rallies by institutions. Yes, it's historic in many ways. It's unprecedented how quickly we rally out of that Christmas Eve low. And institutional money is not going in. On the way up, they were not buying this. They haven't been buying it. They've actually been selling out. It's mostly buybacks, retail traders, and short squeeze that cause this upside. We still haven't seen the big money coming out on the front line. When we do, we could have a continuation up to all-time highs. But right now, it's a elevated level. The most institutional investors just don't want to add to their portfolios at. Think about this. If you were already long, like institutional traders are, they're already long, they're managing client money, they're perpetually long, what would you be doing? Would you be adding at this level? Most likely not, all right? In fact, even the retail traders are looking at this saying, oh, it's too expensive for me. And so that means institutional investors are definitely not touching this market for a long, unless we get some kind of news event to push us through these resistances and climb higher, all right? And the resistance level I'm seeing right now is the 2820 on the S&P. We tried to take a shot at it, didn't quite get up there. Now we're below 2800. So 2800 becomes a key level. All right, crude oil is down 0.4% after having a huge surge yesterday. The single largest drawdown in crude oil history in 7 months. The tea room yesterday, that's phenomenal. We caught this trade pretty good. I was actually at home on the laptop watching it. Didn't have my, I have a new laptop, which I'm going to post a video about, by the way, the next week or two. I was just setting it up. I didn't have time to respond, and I didn't trade it. However, our team did fantastic. We had almost 90% win rate, if I recall. All right, that's great. Awesome. Proud of the team. Super proud of them. Bitcoin today is pretty much flat, hanging around 3,800. Gold's also flat. Today's economic calendar is busy. At 8:30 in the morning, we had a super important number, GDP. All right. And retail sales account for about 30% of GDP figure. So a big miss there, which we saw in the last round of retail sales, would expect to impact the GDP number. However, GDP beat this morning. It came out positive. Q4 advanced GDP on an annualized basis came out at 2.6% quarter over quarter versus 2.2 expected. Personal consumption's up 2.8% versus 3% expected. So there you have it. The retail sales affected the personal consumption aspect. And that, when you read this GDP, the headline number is strong, but the consumption part is what's going to worry markets. So you're going to take it as, great, you got a good GDP beat, but this consumption number is something we got to watch for. Retail sales, the next round becomes that much more important. All right, 8:30, we also had initial jobless claims that came out at 225,000, slightly higher than the 220 expected. Continuing claims are up a little bit as well. 4-week average dropped, however, to 229 versus 235.7. So all in all, not a terrible, it's kind of a neutral report on the continuing claims, on the jobless claims front. 9:45, we have Chicago PMI. That used to move the markets a lot. It doesn't as much these days, but keep an eye out for it anyways. 10:30, we got natural gas. And then noon, we have the Kansas City Fed manufacturing survey. Could have modest impact on the stock market. And then we have an afternoon full of speakers. Get this, 12:15, Fed's Harker speaking on the economic outlook. 1 p.m., Fed's Kaplan speaking. All right, 4:30 p.m., we have money supply and the Fed balance sheet, which I'm going to talk on in just 1 second. And then 3 p.m., we have farm prices, which isn't going to impact the market that much. We got a lot of Fed speakers. We got a balance sheet update after market close. There's a lot going on. There's a lot to sort of price in. Today, I expect to see a little bit of chop, but I expect to see that we open up the downside. Maybe rally a little bit early on in the morning, fail at that level, and as we go through lows, look to sell the market. I think it's a little top heavy considering the news we got in over the last 48 hours. All right. Last but not least, Jerome Powell just continues to be a dove. I feel like he's going to fly away. He's got those dovish wings, and he's going to fly away from the Fed. Yesterday, Jerome Powell said in his testimony to the Congress, he said that, look, the Q3 plan, the plan is for Q3 of this year to stop unwinding the balance sheet. So he acknowledged it publicly. and the market priced that in. That's where it got a little hyped up and optimism came into the marketplace. I think if he didn't say that and Robert Lighthizer tweeted or talked at 10 a.m., market would have been down way more than it is. I think it's a save by the Fed announcing they're no longer going to sell bonds off of their balance sheet. They're not going to unwind or reduce their balance sheet, which means they're not taking liquidity away from the market. Which means if you're not taking it away, there's going to be more, which means more speculation, more asset price appreciation. And so that in itself was enough bullish news for the market temporarily. Think about the long term, though. Think about what he's saying long term. He's saying long term that there's enough confidence on the behalf of the Federal Reserve to continue their hawkish stance, which means the economy isn't doing as well. So that's a negative strike for the economic outlook, but a positive temporary strike for the S&P 500. And we know this, whichever way the economy goes, the markets tend to follow. There's been very few rallies in the S&P 500 from a historic stance in which markets go up, but the economy is going down. All right. Typically, they move together. There's more signs of a slowing down economy than the market's reflecting. So right now, they're diverging a little bit, and that's okay. Markets are allowed to diverge. Markets are allowed to do whatever they want. Our opinion doesn't matter to the market. You think the market cares about what I think? No, not at all. It shouldn't. All right. I'd be concerned if it did. And so that's what we're facing here. Jerome Powell went full dove. I mean, he was full dove before. Now he's just so much dove that like wings are flapping. He's not walking anymore. He's floating. And the market likes that. So let's see what we get today. I think today we're going to get a little bit of rally early on, and then downside is going to open up in the afternoon to the late morning. Watch for that 10:30 reversal hour. That's what I got for you guys. Happy to be back. I'm back today, but I'm gone tomorrow. So our morning market updates are going to resume starting Monday. I will do them, but I'm going to do them from warmer destination. So unfortunately, tomorrow we're not going to have a morning market update, but we have 2 videos coming out on YouTube, Saturday and Sunday. I appreciate you guys. Enjoy them. And if you like this stuff, if you like the video, give us a thumbs up on YouTube. It really helps us get the word out of what we're doing. All right. I appreciate you guys. Have a great day. And see you next week. Don't get in too much trouble this weekend, but get into a little bit. See you later. All right, Trade Pros, the room. Let's get started. I'm excited for today. Finally got my chance to make my comeback here. Yesterday, I got my laptop working on Sierra, but I missed all the good stuff. I got it working right after it slowed down. I wasn't feeling that great. It's not excusable to feel bad and go out there try to hit some big size trades. So today, we're back at it. I'm going to start out talking to you with the S&P 500. There's a few key levels that we'll be watching for in today's session. And when they get there, we're going to have some great trading opportunities. Oil looks very volatile today, so I'll hand it over to Steven and talk about that. Vic will cover NASDAQ. Marky will do Dow. And then 9:30, we'll just rock. All right, let's get started. I'll start with the S&P 500.